Okay, so again, welcome to Investing in Change, Climate Activism, and Fossil Fuel-Free Investing. We are going to introduce ourselves. I'm Carrie VanWinkle. I'm an advisor with Natural Investments. Work with primarily women and couples to help them create ways to engage in their money life that are both smart and soulful. And Gigi, if you'll introduce yourself next.
Thank you very much, Carrie. I'm Gigi Norcross and work with the Green Century Capital Management team based out of Chicago. I've been on the Green Century team for a little more than a year now. Prior to Green Century, I did how I earned a living was raising money for mostly environmental, but also other types of nonprofit organizations. So I come to the issue of climate change from a varied background and see what we're talking about today as one way individual investors and people can make a difference on issues. I'm based out of Chicago and looking forward to the conversation today.
And Nicole?
Carrie, good morning, good afternoon, everyone. My name is Nicole Middleton Holloway. I am based in the San Francisco Bay Area, Oakland, and the East Bay. And I'm also an advisor with Natural Investments. I'm the newest advisor to the Natural Investments team. I am a certified financial planner, and I focus also on working with women and conscious investors to align their money and their wealth with their values and to create positive change in their families and their communities in the world. I, like many folks in California and in the Bay Area, have dealt with kind of the devastating impacts of air quality and the fires, and we had that kind of apocalyptic event that I'm sure all of you heard about over the last couple weeks. It's since gotten a lot better, but I think it's been several years of these fires, wildfires that are just magnifying each year. So thinking about climate change and what we can do with our investments to impact that is very important to me. Thanks.
Yep. And I'm Sylvia Panek. I'm also an advisor at Natural Investments based out of Chicago. So when I could, I'd see Gigi Norcross from time to time in person. Hope to do that again someday. And so my life's work has been helping people align their financial values with their personal values. And climate change has always been a personal sort of issue of mine to the point where I started volunteering several years ago with the Chicago chapter of 350.org, a group that encourages institutions and people to divest from fossil fuels in order to hit dirty energy companies where it hurts the most in their pocketbooks. So I'm very excited to be able to run this presentation with my colleagues and let people who've been wanting to learn how to do this actually be able to put it into practice if they want. So with that, I will start sharing our screen, sharing the presentation with everybody so we can follow along to learning how to incorporate this into your life. So it's, as Nicole kind of pointed out, climate change is being seen more and more often around the world in different ways. The California wildfires, not the least. What we've been seeing year after year, the past, 4 or 5 years, each year has been a new record-breaking wildfire season for California, and it almost feels like, what is there left to burn? And so not only is it wildfires, but extreme heat. We're going to see stronger, more violent storms, flooding, including, drought as well in various areas. In terms of health, before it just used to be asthma, right, and pollution affecting health. But as we see now with the coronavirus pandemic, there's this double whammy that comes around where if you're experiencing natural disasters more frequently, your house burns down, it's flooded out, or tornado rips through, or a hurricane, where are you going to isolate and keep socially distanced and in sanitary conditions when you're temporarily homeless? So that is one of those new issues that I don't feel like people have necessarily thought about until this year. But we don't need to spend too much time on it since most of us know that already. I think a question has always been, does divestment work? And I've pulled this figure from 350.org's Go Fossil Fuel Free project website. And as of this month, we have nearly $15 trillion committed to divest from fossil fuels, right? And these are governments, these are large institutions, these aren't just small, family foundations or just individuals at home. There is major global consciousness and change and sentiment in the fact that this is something that needs to be tackled in a concise way, in a targeted way. And so here's some examples of institutions that have pledged to divest. And a case study that I like to point out is New York State's third largest pension fund did a backtest study. And they saw that by staying invested in fossil fuels, they lost about $5 billion in value for their pensioners, which came out to be about $20,000 per pensioner. Was lost because of having been invested in fossil fuels. So they came up with a five-year climate plan, and they reported that as of this summer, they already have $90 million divested out of the fossil fuels that they used to have in the pension portfolio. So sentiment is changing, it's real, and this is one of the key pieces that will hopefully help us combat problems with this climate solution that we have before us. So I think Carrie is going to talk more about who are some of the major financiers that are enabling dirty energy companies to continue doing business as usual. So I'll turn that over to her.
Thanks, Sylvia. When we think about how our money, the money that flows into our lives, how we then are a part of this system that is contributing, this economic system that not only contributes to climate change, but really drives climate change, banking and investing are two of the key areas. And so in banking, we wanted to show you Rainforest Action Network actually put together this fantastic report called Banking on Climate Change, Fossil Fuel Free Finance. Oops, sorry about the typo there, Report 2020. And you can see here, if you can see the slide, that the financial institutions financing fossil fuel corporations globally. You can see since the Paris Climate Agreement was signed in 2016, the few years since then, they identified a dirty dozen. And the top one is JP Morgan Chase by far. And then you see under JP Morgan Chase, Wells Fargo, Citibank, and Bank of America. So those are all really familiar institutions. A lot of us probably, have had or have money at those financial institutions. And so a really powerful way for a lot of people to take their money out of the drivers of financing fossil fuel industry, the fossil fuel industry, is to move your money out of, especially these, if you've got them in these kind of top 4 worst offenders there. Okay, Sylvia, next one. And then conventional investing. So conventional investing, that's just a term I use for kind of typical investing and the typical system of investing that's out there. And again, a lot of times people don't think about it. So that you've got your 401k or your other type of employer sponsor retirement account. You're not thinking that that is part of this economic system that's driving climate change. And also index funds, you know, people say, oh, I'm gonna get an index fund that follows the S&P 500, or I'm gonna buy this Vanguard mutual fund, or ETFs, you know, are all the rage these days, or they have individual stocks. That's easier to identify, but when you've got a group of stocks, maybe that you've bought into, especially if you're engaging like with an automated, like what we would call a robo-advisor, like Betterment or something like that, you may not even realize what you own, and that you do own some of these companies that are very focused on the extractive industries of oil, coal, and gas. And then another part of how our money flows through the system is how we give. And whether it's endowments of charitable organizations that we're giving to, if that charity, if that nonprofit, if that foundation has an endowment, and then we may not realize that some of our money is going into that endowment at the foundation, and that endowment is the money in that endowment, often millions and millions, if not more, dollars, are possibly being invested into fossil fuel companies. And then universities is another big one, where universities, especially larger universities, can have endowments, and it's not unusual, it's very typical for them to also be partly invested in fossil fuels.
Great. Thanks, Carrie. And so piggybacking off of what Carrie just described and explained, oftentimes people talk about the risks of not being in a fully diversified portfolio, but we want to talk about the risks of staying invested in fossil fuels, because they've become significant in the past several years, if not past decade, especially. So we have a statistic here that over the past 5 years, indexes without fossil fuels, so not as fully diversified, have outperformed identical indexes that have been holding fossil fuels in their portfolios. And in terms of performance, I'd like to point out ExxonMobil, which used to be sort of the blue chip darling of the investment world, back in 2014 is about when they peaked in terms of their size, being one of the largest companies in the world. But since then, they've had their credit downgraded by Moody's and the S&P index as well. This month, or last month, August, they were dropped for the first time from the Dow Jones Industrial Index. And they've lost several $100 billion of just overall value as a company. So if ExxonMobil is being hurt in these ways, what is happening with the other 200 or so fossil fuel companies that we're seeing? And as they've been tracked, volatility has been increasing in that sector, and they're going to be hit, it looks like, possibly with a double whammy with stranded assets. And what stranded assets are, a company is able to include the value of untapped resources. So oil, coal, and gas that's still in the ground is a part of their valuation, part of their bookkeeping. And if they end up being forced to leave it in the ground, either because of regulation, you know, countries, municipalities say you can't touch it, or litigation, or it just becomes financially too expensive to extract it, you'll be operating at a loss because renewable energy is, you know, competitive and cheaper. And if they're forced to write it off, that write-off exacerbates this sort of downward spiral of their corporate value. So it's not looking good for the fossil fuel companies anyway. And here's a little slide to show what we've been talking about, what I touched on earlier. So the blue line is MSCI is a global index research company, and the blue line is their world index without fossil fuels. So, and the yellow line is the similar index with fossil fuel companies included. And so you can see that pretty much for the past 10 years, not having fossil fuels has been a good thing for an investor, and we are expecting that that will continue. So I'll pass it on to Gigi to talk a little bit more about Green Century.
Thanks so much. I am very honored to have been able to put together this webinar with our colleagues from Natural Investments. It's been a fun thing to do, and hopefully the information that's presented here is helpful to people. Should make clear that Green Century and Natural Investments work closely together because Green Century offers a portfolio of fossil fuel-free mutual funds, but we are not the only product out there. So the idea here was to give an example of a way to invest your dollars fossil fuel-free and how Green Century approaches that. So a little bit about Green Century. Green Century Capital Management is an investment advisor to a family of fossil fuel-free mutual funds in the United States. We are a leader of a highly effective shareholder advocacy program. Our shareholder advocacy program engages about 50 companies or thereabouts per year on a range of important environmental issues, from protecting the bees and the butterflies to plastics, to renewable energy, to deforestation around the globe. We're the only U.S. mutual fund company owned by nonprofit environmental organizations. And in fact, we were able to also, as part of Climate Week, our affiliated owners out in California hosted a webinar called The Fierce Urgency of Fire, which the topic focused on how wildfires, obviously quite topical, hurricanes and other extreme weather events underscore the case for climate action and renewable power. So we can provide a link to that webinar. It was Environment California, the experts on the issue in California, moderated by Environment America's interim executive director, who is also a member of the Green Century board. So another webinar that was happening here during Climate Week to underscore the need for addressing climate change. Green Century was established in 1991 in Boston, and we remain headquartered in Boston today. And an investment advisor to 3 mutual funds, 2 of which are passively managed index funds, international index and the equity fund, and the third is an actively managed balanced fund. So 3 different products, all of which are fossil fuel free. So then moving on to Green Century's approach to investing in sustainable companies, we deploy multiple investment strategies. So I spend a little bit of time on each of those 3 investment strategies. The first of which is making use of environmental, social, and governance performance ratings. Since our inception, Green Century has used ESG ratings to invest in companies that lead in their sector. Then the second piece is the value-based screens. So many of Green Century's investors come to the table because they don't want to invest in corporations that are dangerous or bad for the environment. So Green Century does not invest in civilian firearms and military weapons, tobacco, GMOs, or nuclear energy, nuclear weapons. And then the final piece of our investment strategy is the fossil fuel screens, which are custom to Green Century's screening methodology. And I'm going to read exactly what it is that Green Century does. We do not invest in corporations that explore for, extract, process, refine, and transmit coal, oil, or gas. We do not invest in corporations that burn fossil fuels to make electricity, and we do not invest in corporations that possess carbon reserve. And the reason that I read that exactly is because if you were to go and find the prospectus on any of our 3 funds, you would find those words in our prospectus. And that's important because the definition of fossil fuel-free investing for us is not a marketing thing. It's not a tagline. it is defined in our prospectus, and therefore it makes its way into every single one of the holdings in our three funds. There is no universally accepted definition of fossil fuel free, and there are examples of things that call themselves fossil fuel free when they're really not. Low carbon, for example, is a way that some funds might put themselves in the fossil fuel free space, but that is not fossil fuel free. You know, for example, low carbon may include fossil fuel companies and or bonds by major oil companies. So the kind of takeaway here is that as you consider divesting your own portfolios from fossil fuels, get under the hood with respect to what fossil fuel investing, what those definitions are by fund, so that you can compare the truly green products from ones that call themselves that but aren't in the same playing field.
Thanks, Gigi. And I think Carrie now will talk a bit about natural investments approach.
Thanks. Yeah, so a little bit about natural investments and how we're taking a stand to help our clients address climate change. So last year, we had $195 million dollars in our invested in our fossil fuel free portfolio. And let me also note that, like Gigi talked about with what does she talked very well about Green Century's definition, what they use to define fossil fuel free. And she also, you know, did say that it's, it depends on who you're talking to, what they mean by that term. And so for us, we use the definition that As You Sow uses. It's very similar to the Green Century. It doesn't mean, you know, she talked well about one side of that where, you know, it's almost misportrayed. It seems like there's another side of that too, where fossil fuel free does not mean 100% not touching any type of industry that may use fossil fuels, like you know, like Tesla, for example, or, you know, an auto, I guess Tesla's probably not a good example, but, you know, an auto company, for example, may still be in a fossil fuel free fund. But she gave a really good idea of where the parameters tend to lie. And those are really the worst contributors to causing, you know, affecting climate change. So that's where we really focus. And something really important to note about natural investments is we don't take what I call a one issue approach to fossil fuel free investing. So with some of these ETFs, for example, that are just coming on the market every day that are, like Gigi mentioned, low carbon, or they say they're fossil fuel free, or I see them as, when you look under the hood with them, you see that they're like one issue voters, you know, that are just blindly focused on one issue, ignoring everything else. These can be kind of one issue approaches to fossil fuel free investing where they're ignoring a lot of other things. And you heard Gigi talk about Green Century is a great example. They do not do this. And they're looking not only at the fossil fuel issue, but they're also looking at other issues that affect people and planet, like she mentioned. And that's an important approach for us. We also use impact and regenerative investing. A lot of those are private investments. And for certain clients in certain situations, they can be really exciting and fantastic ways to invest more in what we want to see in the world. And then we also are very active in engaging in shareholder activism. As a firm, and then individual, you know, as a firm, we reach out and do this. And then also we work with groups like Green Century and other groups to really leverage our voice, leverage our clients, you know, investment dollars and the power of that to really rattle the cages and create change, hopefully there. And then a little bit more about, you know, how we do this in publicly traded investments. We're divesting out, so we're getting, we're not investing in certain areas like fossil fuels. We're reinvesting in what we want to see more of, like renewable energy. We are engaging in shareholder advocacy, and also, really importantly, we are engaging and investing in what's called community investing, which really focuses on people most at need, people most at need, both in the United States and around the world, and ways to get more capital to them through community investments like affordable housing, small business owners, and micro lending is another big one that are community investing. And some examples of the private and regenerative investments that we have used in the past with clients, again, when it's the right fit for the right client, we've helped clients invest in organic farmland, local food distribution, solar installation, renewable energy infrastructure, fair trade businesses, and worker-owned cooperatives as just some examples. And then also what we do in philanthropy, we support clients in creating intentional giving plans. And we are a certified B Corp. We're actually the founding certified B Corp. And each advisor in the firm is committed to donating at least 1% of our gross revenue each year. And a lot of the organizations, the charitable organizations that advisors tend to donate to, really do focus on issues of climate change. 350.org, lots of local, state, within each advisor's state, each advisor's community, but then also nationwide and globally to have impact there as well.
Yeah, and Carrie, I just wanted to throw in terms of the community investing piece that you were mentioning. I mean, we realize that low-income neighborhoods tend to also be people like minorities, right, who are affected by pollution the most. Isn't that right? Like, from an environmental justice perspective, like, we realize that these communities are going to be the hardest hit first with climate change and everything. So I just wanted to throw that in there.
Thank you.
But, so then Nicole is going to jump in and talk about a bit more of like do it yourself for those who don't have an advisor, don't need an advisor, and want to learn more about DIY.
Thank you, Sylvia, and thank you, Carrie. So we've presented a lot of information quickly to you. So I think it's good to take a breath and let it digest. We kind of defined the problem and talked about how conventional investing and big banks and not being aware of what you're holding is contributing to the problem of climate change, and how there are financial risks to investing in fossil fuels as well. And there are many solutions out there, including mutual funds that Green Century provides as well. And so I really want to help reinforce how you can invest fossil fuel free. The first thing that you can do is, to have more awareness about what you own. There's a wonderful tool that was produced by As You Sow in collaboration with Morningstar to make it really easy to find out what the fossil fuel free exposure in some of the holdings that you own. So you can just go to fossilfreefunds.org, and it's a really useful, easy to use tool where you can become more aware. Fossil fuel free also is the definition of it, depending on which fund or holding that you use, investment that you use, is written in the prospectus or the investment policy statement. So reading those for the investments that you own may be able to give you more information about whether or not the investment truly is fossil fuel free. And if you're working with a financial advisor, here's another thing that you should absolutely do. You should ask your financial advisor to help you look at the exposure to fossil fuels in your portfolio, and to see what is possible for you to divest and to reinvest in, perhaps, if needed, into funds or other investments that are more in line with your values. Divestment, you want to move out of coal, and specifically, we recommend that you move out of coal, oil, and gas stocks in your mutual funds and ETFs that have them. We also urge you, or have you, want you to consider changing your bank to a bank that doesn't provide loans or fossil fuels, loans to fossil fuel companies. A resource for that, and maybe my colleagues can throw it in the chat. Green America has a kind of search tool online that's available to you all if you want to use that tool to help identify some banking institutions that that are more aligned with your values and not contributing to investment in fossil fuels. And then another power that you have is, a lot of our wealth and savings is tied up in retirement plans through work, as well as through IRAs. So if you have a retirement plan through work, like a 401k or a 403b, some organizing around that may really help. So first of all, find out if you are invested, if your company even offers fossil fuel-free investment options. And if they don't, then trying to identify who the fund manager, for your 401k or 403b plan, identifying who they are, and maybe also getting, doing some organizing amongst your coworkers. It may help to have more than just one person asking your company's retirement plan to offer fossil fuel-free investment options. So maybe there's an affinity group, like maybe, a lot of companies have women's, affinity groups, or other types of affinity groups that are about that want to help the environment. But just trying to organize and get a few other folks besides just yourself to all go together is meaningful and may get the attention of the retirement plan then, more easily than if just you as one person do that on your own. And then if you're divesting from fossil fuels, it's important that you consider where you reinvest your money. And again, there's lots of clean fossil fuel-free mutual fund and ETF options. There are moving your checking account or savings account to banking institutions that are not supporting fossil fuel companies. And then also thinking about where your philanthropic accounts may be. There are many community foundations and other places, other philanthropic institutions where you might hold things like donor advised funds. And if you do hold those philanthropic accounts, you should find out if they are investing in fossil fuels and if they have fossil fuel-free investment options. And then finally, I think it's really important to be thinking about if you are giving to organizations in support of that are doing the work, truly doing the work on the ground to advocate for better conditions that are going to be supportive to communities and better for the environment, that you really consider giving to grassroots environmental justice organizations. And then I think also, if you're thinking about selling out of the funds and reinvesting, there may be a tax consequence that you should talk with your financial advisor or your tax advisor about, but perhaps that creates an opportunity to write off some of that capital gain by using that as a donation to a nonprofit organization that is advocating and doing the work for environmental justice. So I think we are at time where we would love it to open it up to you to ask questions. So feel free to, we've unmuted you, so feel free to unmute yourself and ask a question, or you can ask a question in the chat box. I have one question to just start it off, and maybe I'll throw it over to my colleagues to answer it. But I got one message where someone has asked, I have a financial advisor, and I've asked them about aligning my investments with my values, but they haven't been very responsive. So what should I go back to them and ask for?
Show them the statistics from this webinar.
I'll offer too that it seems like these days there are more and more what I would call conventional advisors who don't really focus solidly in the socially responsible investing space. They are adding some options that may include fossil fuel free options. And so their toolbox might be built out a little bit. So it's worth asking, because you might have even asked them a couple of years ago and they didn't have something, and now they do have something in the toolbox that is fossil fuel free. They do have, an investment choice or some investment choices now that are fossil fuel free. And where I would just suggest, I'd suggest that you just have a bit of conversation about what those options are. Sometimes they still can be very limited. So you just want to make sure it's still the right fit for you. And also it's not, like I mentioned before, it's not, if you don't really want a one issue approach, where, okay, that fund is not invested in fossil fuels, but they are invested in defense contractors or, other really common companies that you might not want to be invested in, types of companies, then, just have that conversation as well so you know what you're getting.
Great. We invite you to, we have one question here from Shiraz. Are there resources in real estate investing, builders, contractors, service providers, etc., that we can provide as well? So folks who are specifically thinking about real estate investing and how thinking about that in terms of being fossil fuel free. So does anyone have any thoughts about that question?
I'd like to hear, Shiraz, I'd love to hear a little bit more about, just so I'm clear on what you're asking. But so if you're comfortable getting off mute, we can do that, or if you just want to add in the chat, either way.
Yeah, no problem. I'm actually curious because we do, I visited the Green America website, and there's some pretty good resources on there in terms of banks, and really appreciate all that information, by the way, so far. I am curious, yeah, from the, if we're looking at real estate investing, are there firms that might, guide in the correct model of potentially investing in underserved communities, and with, potentially building with, appropriate materials and using good labor practices, things like that?
That's a great question. I'll jump in and answer it a bit, unless somebody else has got something they want to offer. Okay, so we probably what we're talking about, we're not the best hub of information to answer your question, but what it makes me think of is if there's a resource online for LEED certified architects or LEED certified real estate investors, builders, contractors. That's to me where I think I would go to get some answers to your question of who's out there that's in that space, that's really and they're really trying to develop real estate in a way that is more green and focus on renewable energy and energy efficient. We do have some investments that are, you know, I can think of examples of companies that I won't name outright, but I can think of examples of companies that are within our investments at Natural Investments that are focused on renewable energy and green energy infrastructure that overlap a little bit, but I feel like more what I'm hearing you say is more like those, like LEED certified, for example, providers.
Got
Is
it.
that
Thank you. Did you say
okay?
LEED certified? Is that the right?
LEED certified. So LEED. Anybody
Got
know
it.
what that? I can't rattle off what that stands for offhand.
It's a certification that's offered by the U.S.
Green Building
GBC,
Council.
Green Building
Yeah.
Council. Yeah, LEED certification, LEED, right?
Mm-hmm. Yeah.
Thank you. That helps.
Thanks, Truss.
And I think I'll just add to that. I think what I've seen a lot in terms of the affordable housing space, like new affordable housing investment, most investments that I see, and you know, you'd have to look, you know, specifically at the investment, you know, but most of what I've seen in that space, these affordable housing opportunities a lot of them are built with they are built with LED certification, like they include in the building of this housing, for instance, that it's, you know, solar and environmentally friendly building materials. So but I would just suggest that you look a little closely depending upon what investment that you're considering, and then also talking with an advisor more deeply about it. That can kind of help you answer some of those questions there. So thank you, Shiraz. We've got another question about, can we hear more about the differences between various Green Century funds? So Gigi.
Sure. Yeah, I can talk about that. Sylvia, could you go back to the slide that has the list of the 3 Green Century Fund? There you go. So Green Century Capital Management is an investment advisor to 3 mutual funds, and they are listed here, and I will describe a little bit about each one of them. And then I also will invite you to visit our website that has much more detailed information than I could ever provide in a short answer about the funds, the approach, the holdings, etc. The Green Century International Index Fund and the Green Century Equity Fund are both passively managed index funds. Green Century sub-advisor on both of them is a company out of Chicago called Northern Trust, and both adopt a similar approach just with respect to its screening methodology. And these are attractive funds to people that are interested in making an investment in the international space. So the international serves that purpose. And then the equity fund is made up of companies that are domestic. The balanced fund is structured a little bit differently. It's an actively managed fund that is a mix of stocks and bonds, and the split there is typically around 60% to 40% equity and fixed. On the fixed side, one cool component of the balanced fund is that more than half of it are in what's called green bonds or bonds that have a sustainability focus to them. So one example there is Starbucks is a holding within the fixed portion of the balanced fund and in the green bond category. And the proceeds from the bond for Starbucks are helping them to do more training with farmers on sustainable farming practices, short-term and long-term loans to farmers on their farms and equipment that's used. And then also towards doing farming just more sustainably. So that's an example of a green bond that's in the balanced fund. And again, more than half of the fixed portion of the balanced fund is in that type of holding. The website, greencentury.com, it has a section called The Funds, and then there's detailed information about each one of them on the website, inclusive of one-pagers that go through performance that's updated quarterly. So the fund briefs that are available on the website now are through the close of the last quarter. And so if you want to check again in a few weeks, it will also, we'll update them again for fund briefs with performance information through the close of September.
Thanks.
Gigi, I'm wondering if I can go a little off topic and ask you, wrong slide. So since you don't invest in anything to do with fossil fuels, you cannot use shareholder advocacy as a tool, right? You don't own any shares in them, so you can't engage the company in dialogue. They're not going to really bother listening to you, can't file shareholder resolutions. So it's a little off topic, but I was kind of curious because Green Century is such a leader in the space, if you can just provide an interesting example of a shareholder advocacy effort this year that you did do.
Sure. Absolutely. I'm happy to talk about that. I'm just trying to think which one should I talk about, and I think I'll talk about Verizon. So in our shareholder advocacy work, I mentioned that we engage with approximately 50 companies per year, and those engagements then lead to positive changes in company corporate practices towards the environment. So last year we engaged Verizon Communications. People might be familiar with that company, pretty big telecommunications company. At the start of the engagement, Verizon was committed to sourcing 4% of their energy from renewable sources. At the conclusion of the engagement, they were committed to 50%, sourcing 50% of their energy from renewable sources by the year 2025. So big company, so that kind of change has a lasting impact on the issue. On a timeline that's very defined. So Green Century engages lots of companies. We look to get substantive changes in policy that make a substantial impact on the issue, and then on a time period for which we can hold the companies accountable, because it's not just a engage, get the agreements and then walk away, but engage, get the agreements, and then do follow-up conversations and dialogue to ensure that timelines are being met. From just this one engagement from Verizon is the equivalent, the reduction in emissions that come from this one change is the equivalent of taking 500,000 cars off the road annually.
Wow.
So that's one example from the list of engagements that resulted in a win from last year's shareholder advocacy season.
That's amazing. Thank you.
Awesome. Yes, and I definitely invite you all to, you can read about more examples. I think one of the most impressive things about Green Century is their shareholder advocacy work. And they have several. We don't have enough time to talk about all the examples, but that one example alone is very, very impressive. So thank you for giving that example. We have another question about resources. Do we have any resources in organic, sustainable food production, distribution, food security, etc.? Anybody want to answer that? Carrie?
I can, unless somebody else wants to jump in. No? Okay. We do, particularly like I mentioned before, in our private, high impact, regenerative portion of investments. We have in the past and do have some choices, investment choices. Again, the disclaimer here is that with private investments, not every investment's the right fit for every investor. So it's, you have to qualify financially for some of these investments, and then it has to be the right fit for your situation. So that's part of what we do as advisors, is really work with, we're matchmakers, work with the client, the investor, to make sure we're finding things that are the right fit for your situation and your needs. Given that disclaimer, we do have a few that I can think of. For example, Iroquois Valley Farms is one of the investments that we've worked with for quite a while. They are an organic farmland REIT, real estate investment trust, and you can find them online, Iroquois Valley Farms, and they help people invest in the preservation of organic farmland. They work very closely in a supportive way with farmers. A lot of the farmers are multi-generational farmers that they're trying to stay on the land. They're trying to expand their organic farming capacity. And then another really important part of what they do is they help farmers transition conventional farmland to organic farmland. And they, a lot of, investment strategies don't do this in the supportive, nourishing way that Iroquois Valley Farms does. So they're fantastic. Yeah, and Sylvia mentioned here, Rodale Institute is a good general resource for kind of probably a lot of things related to organics and sustainable food production. And yeah, so I'll leave it there. And if you have follow-up questions, just let me know.
So then I threw that into the chat. The Rodale Institute is a think tank based out in Pennsylvania that focuses on regenerative agriculture, going beyond just trying to farm organically, but it's also just things that produce healthy soils, management, living hedges, that sort of thing. And Iroquois Valley Farmland REIT that Carrie was just talking about partners with them very often on these issues to help with from a technical assistance standpoint, to help the farmers do more than just not use pesticides, right? Or herbicides and all of that.
Awesome. We have about 4 minutes left, and I don't see any more questions in the chat, but would anyone like to unmute themselves and ask a question? One more question in the chat. Thank you. From Kyle. What is the advantage of going with natural investments versus building a portfolio on our own? I can answer that question. Building a portfolio on your own is very doable, and there are a ton of resources online, as we've talked about, to kind of help you identify some funds that you might want to consider, as well as funds that we've talked about on this call. And sometimes it takes but for some folks, it's hard to figure out how much risk I should take, and they need to have someone who can make it real for their situation, and to kind of really help them be accountable and take the next step. So part of it is just, it's being as advisors, we are our partners because we are educated in the universe of aligning your investments with your values. We're trained to be able to help you look at a really comprehensive view of your investments in your portfolio, and really help listen to you about your goals and what you were trying to achieve, to help help make recommendations. So that's another advantage of working with natural investments, is the fact that, as Carrie talked about and as others have talked about, is that we're not just looking at it at purely one-sided. We're not looking at it at just your the investments in the publicly traded markets. We're looking at, we can recommend what's available to you on the private investment side and the community investment side. And we can also help recommend things if you are thinking about your philanthropic giving. So it's very much more holistic, and that's the benefit of working with a natural investments advisor. Does anybody else want to add anything to that?
No, I think that pretty much covers it, right? I mean, we're here for people who don't have the confidence or even desire to do it themselves, right? Not everybody is into finances and investments and the amount of work that goes into it because they're busy with, their family or their job or just wanting to go hiking. So, that's when you hire a professional to do it for you. But if you want to do it yourself, there's tons of resources out there, and we're also happy to share. I'm always willing, to say if natural investments isn't a good fit for you, to recommend sources for you to take a look at and do it yourself. So, it's just better to have you not investing in fossil fuels than, with us or without us.
I'll add one last thing, Nicole, that we do have, especially for people more on the end of starting out with an investment account and they want to do either socially responsible investing in general and even specifically with fossil fuel-free choices, we do offer what's called an intelligent portfolio option, which is held at Schwab or custodied at Charles Schwab. And it uses one of the options that we provide there is it uses our fossil fuel-free models so that you have access to those. You don't have to pay an advisor to work with us. And it's you do have to have a bit of an account built up. There is a $5,000 minimum that's Schwab's requirement. But if you're interested in learning more about that automated option, it's a great way to start building either a retirement account or a taxable investment account and get access to some great fossil fuel free approach.
Yeah, thank you, Carrie. I'll make sure to include that and all of these other resources that came up during this conversation in a follow-up email to everybody who's registered, as well as the recording. So you can take as deep of a dive into it as you want to after this. So is there anything else that popped up in the last minute?
That, I believe, is it. So we just want to thank all of you for spending time with us and educating yourself about fossil fuel-free investing. You can contact any of us at Natural Investments by going directly to our website, naturalinvestments.com. You can search on the advisor tab and you'll find out how to contact us directly. And Gigi, how is the best way that they should contact you? Should they contact you or go on to Green Center?
We can include in the follow-up that Sylvia sends out my email address, and then our website is also a good source of information, plus a way to contact Green Century, and there's a 1-800 number on the website that people can call.
Beautiful. All right. Have a great day, everyone. Thank you.